Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. I feel like this week has definitely been a slower news week, but thank God it's Friday, because not only do we have the bank earnings, we have a lot of news out of Disney's Investor Day yesterday. We have Chevron announcing their acquisition of Anadarko this morning. Surprise, $33 billion transaction there. I mentioned the bank earnings. We have Boeing completing some more test flights. We got a lot to discuss, and our guest today is going to break down the IPOs for us, recently IPOs of Lyft and how it compares to Facebook. Her name is Donnelly. She's a proprietary trader and the co-author of the Lifecycle Trade. So a lot to get to on our show. Busy day, Joel. What's the word here overnight?
The sneaky breakout in the overnight session. The wall at 2,900 has been destroyed. Good bank earnings overnight. We are trading up 15 and a half handles, 29.07 and a quarter. We are now back up near the October highs. October 9th high is 29.0950. Above that, we're looking at 29 and a quarter. On a pullback, will you even get lucky enough to buy this at the former breakout area right at 2,900? So old resistance, new support. Crude, the one-day decline has been erased. Back up at the highs of the move, folks. We got to keep an eye on the potential quad top here. Looks like, what are the four highs? Let me give them to you. Your current high is 64.60, and then a pair of highs at 64.70 and 79. So there's your major area. In the crude market, gold up $2.5 at 1295.80, continuing that trading range. Gold up silver up 11.8 cents at 14.985, and Bitcoin doing the 5,000 dance, up 32.50. This is the futures at 5,080. Triple D, I don't know if we really need you on the show today. There's really not much news. There's not much.
No, it's pretty slow news day here. So we're scrambling, trying to find something to talk about here. So if you got something to talk about, let us know.
No tickers today. We'll be taking.
I can't find anything moving this morning. My filters are just blank. I don't see any stocks getting taken over. I don't see any mice running wild here this morning. I don't see any of this. Oh, maybe I do. Maybe I should. I got to bang on. Oh, yeah, the filter is working. Oh, yes, we do have some stocks moving. Spencer, what's all this news? What's going on?
Oh, my God. Where do you want to start? We have earnings coming in as we speak. We have Disney popping on this morning, I guess, off the headlines that were out yesterday. We have the big M&A news this morning with Chevron. I think we should probably start with Chevron. I feel like let's
all right, let's go to Merger Friday. It's Merger Friday. Anadarko off the board, going off the board. Chevron. Give us details. Yeah. Details, Mr. Israel.
$33 billion acquisition.
How big?
$33 billion. So that comes in. It's a stock and cash deal. So the takeout price is going to be 16 and a quarter for Anadarko, and Anadarko shareholders are going to receive 0.3869. That's the ratio, 0.3869 shares of Chevron plus that 16 and a quarter takeout price.
Well, congratulations to all the insiders, because they kept this one actually quiet. There was no run up there at the close or anything like that. So it looks like this one was as clean as it gets. I never heard any rumors about Anadarko getting taken over. So boom, we come in, big takeover here. Risk Arb's taking over the trade here now. The ratio, once again, 0.3869 plus 16.25 in cash. So what you got to do if you're going to trade this after the fact, you're going to take the price of Chevron, CVX, and multiply times 0.3869, add on $16.25, and that's the price that you'll get for APC. And APC is trading a couple dollars down right now from that takeout price, so a little bit of risk. But when you see a $65 price, you can't look at that because it's a stock deal, so you got to do the 0.3869 plus the 16.25 to come up with the price. But basically going forward, once the risk arbs take over, basically Chevron or APC will move 0.3869 for every point that Chevron moves. That's what you got to know if you are a risk arb trader.
I mean, I think over the years, you've kind of heard Anadarko, rumored a little bit. I mean, it's on and off. Nothing substantial.
Well, there's been rumors, but have you heard anything in the last year? I've not heard. I've heard crickets in the last year about a big oil takeover. No. I have not seen anything really. Not on Anadarko. I think years ago, yeah, but not in a while. This was not rumored.
No, it wasn't, and evidenced by the charts here. We got to talk about the acquirer, right? I can tell you, Dennis, you worked the math on the ratio and whatnot. I don't know. I don't think we'll see any regulatory problems with this one. Probably.
Risk arbs are saying not much. Okay. Because it's only a $2. Or let's do for fun. Let's do the calculation. So bring out your trusty calculator because I have trouble doing that error math in my head here. So after a little while, you should have a spreadsheet if you're trading risk arbs, and you just have
you should, Dennis. You
doing
should.
It all the time. But I don't have the spreadsheet set up here yet at 8:07 in the morning. So let's go 121.3 times 0.3869. Gives you $46.93. Add on the $16.25. This is at the current price. It will give you a total of $63.18. It's trading 62.10.
Ooh.
Only a buck? Risk arbs.
Yeah.
Only $1 risk here. Okay, so right away I think short APC because I buy Chevron against it, and obviously in the correct ratio here because $1, only $1 risk. Risk arbs, too many people too excited. I think if you're a risk arb, I think I'd be selling the APC and buying the Chevron and looking for that premium to expand a little bit. I mean, only a buck. That seems like not much of a discount for risk arbs to be putting in this right now.
Do you want one word of caution on that?
Yeah.
What if someone wants to pay higher?
No, you think so? I think not.
I'm just giving you a
fading
scenario.
That. I'm fading that too. I don't think anybody's paying more than 30, whatever the hell they just paid for Anadarko Petroleum. It wasn't like this has been a hot sector. This is a deal. Okay. Obviously, there's going to be some synergies here. Chevron's already talking about synergies. So probably, maybe long run, it's a good deal for Chevron here. I don't think there's any better suitor coming. So I think when it's only giving $1 discount, I think that's not enough.
Okay.
I think it's going to widen. I think the spread widens here.
All right. Well, you've been doing this a lot longer. You've been doing this a lot longer than I have.
I trade risk arb. I've traded risk arb for 20 years. I do all types of different types of arbitrage. I do risk arb here too. Sometimes I like to let the dust settle. I almost feel like putting this one on, which would be to obviously play it that way there. You'd be shorting the APC, buying the Chevron, and the ratio 0.3869. Did you there you go. Jimmy A, I know you're trading it. What do you think of this? Jimmy A is the risk arber in the chat. When they're only giving $1 discount, is that what you maybe I just made that do the calculation?
No,
wrong?
We did it.
Pretty sure I did it right.
No, you did it right.
Jimmy A, give me your thoughts.
Does
should we be selling the APC, buying the Chevron? I feel like we should be.
Does Bob have any GE Honeywell on still?
And that's the problem with the risk arb too. I like putting it on that way because it still falls apart. There's even more opportunity that way. But I mean, there's always risk in deals falling apart. But I'm actually shorting the acquired. So the only risk would be Joel's scenario that somebody comes and chumps the bid. That's the risk when you're playing that scenario. Otherwise, you're losing $1 if this deal goes through. So, I mean, I kind of like that.
Okay. All right. We broke that down as well as anybody on Wall Street. The pre-market low comes in at 1.
Well, the high traders can break it down better.
Okay.
They already built their spreadsheets 2 hours ago when the deal was announced.
Going to take
I have to do on the calculator. It's obviously just a formula into an Excel spreadsheet, and you can just track it all, and then it's easy, and you can just see what the discount's going at all the time. But I have not done that yet.
119.01 is your pre-market low that coincides with your March 8th low, and now you're $2.50 above it. So there you go. If you have the ARB, what Dennis is talking about, there'll be more buying pressure here on the Chevron. I like that low coinciding with the daily low. I know there's always different things that are going on in the ARB, but the fact that we're $2.50 away from that pre-market low makes me think that low of the day's in here. You got a ways to go to fill the gap. The gap from yesterday's trading is way up at 124.75, but also not a bad time to do an acquisition for Chevron here as you're trading, within a few percentage of your
they're using
high.
A good chunk of stock.
Yep.
I mean, really the majority of it is stock. So yeah, you know what? Makes some sense. It makes some sense for Chevron.
All right, let's rip through the sympathy plays real quick.
Ton of them. I mean, obviously APC, you think it's got oil. It's also got some natural gas, a pretty good chunk of natural gas. So you're going to see some of those moving. But all the smaller guns, go to your XOP, you'll be loaded up with all kinds of stocks. I always think pure plays like an APC, Apache often moves with it. So think APA. It's getting a sympathy lift. It's already up 6% here in the pre-market. You could think Devon Energy, whatever you want to call it, up 5% here in the pre-market. It's getting a lift. PXD, which is Pioneer Natural Resources, is up $5. Conoco, I think it's Conoco Resources, CXO, getting a lift. The smaller ones like Hess, or the bigger ones like Hess, MRO, Marathon Oil, getting a nice lift here this morning. Noble Energy, NBL. Just go into your XOP, pick a component. They're all trading up on this.
Oxy, OXY as well.
There's so many, 50 of them. 50 of them. The biggest ones, I probably would say APA, number one for sympathy. Devon Energy, I like trading that one with them too. And you can just look at the charts before and you can see they all trade together. This is going to lift the sector.
And you want follow through, whatever one of these you're trading, you want follow through the pre-market high. This is just trading up on speculation here. So if you are buying these, be careful. Make sure you get follow through. Sympathy plays sometimes work, sometimes don't work. You could have someone saying, hey, I've been waiting to unload my Apache for a long time. I'm going to do it into this rally. A lot of different circumstances. I know this is not going to be related, but is it finally time to buy the Reverend stock, Geospace Tech Corp? It's been sleepy for so long.
Holy cow, tangent. How did you take us to Geospace?
I don't know. Oil. They're in the oil corp. And I've been waiting to buy it forever. No,
I don't know. GEOS. Actually, the chart looks okay, Joel. So it's a hell of a tangent you took us on here. But GEOS, why? Why do you like this one?
I don't know if things are heating up in the oil sector. They're going to be
I don't see this as an oil play really though. I see this as technology play.
Well,
so let's go look. They're technology, so they do innovative product for seismic data acquisition as part of the oil and gas industry. So it's a tech play on oil. You know what? Just looking at the chart, I don't mind the chart here. Interesting tangent.
Okay. All right, then let's.
No, I want to get your theory here. So GEOS, why? Why do you like this? I just
think oil. When I think about an oil stock that I've watched go down and I want to buy, and I think about some of the Reverend's calls and how they,
he's made some good calls. He finds value.
And this one, he told me that I could. It was a while ago though, to put either my grandma or my mother-in-law on it. My grandma's not alive anymore, so it would be my mother-in-law. So it just looked. It's been sleepy forever. It's just a stock. When I think of oil sector, it come to it was.
Stocks go down for a long time. The Rev always gets interested. He's a pure value investor, exactly. So he's buying when they are in the doghouse. And you know what? I don't mind. He's actually makes some good calls there. So we're talking about Reverend Emmanuel Levelson, who we have on the show every once in a while. So GEOS. But let's move on to the other big news of the day. It is maybe one of the most obvious trades that actually worked. Disney, long, Netflix, short. I mean, this was known. They were coming out with all this stuff. This was well publicized. Yep. This investors event for weeks. And I cannot believe the rally that Disney is getting on this. I did not see this coming. I would have thought a lot of it was priced in. Last night, even as the investor conference was going on, there was some headlines coming, and Disney was just kind of hanging out. This morning, they've just decided they have to own the House of Mouse now. Now is the time. So buy on rumor would have kind of worked. Buy on news is definitely working. I cannot believe the lift here, $7.71. Spencer, give us some highlights from what was said about Disney. This rally is absolutely incredible. It's up 666 right now, 6.66%.
No, that's not good. That's bad. Actually, that's a bear sign. But okay, so I'll give you the highlights and then I'll give you my theory as to why it's up so much this morning. From their Investor Day presentation, they saved the best for last. Of course, it was pretty much right before the close is when they started talking about, right before the after hours close at 8 p.m. Eastern, they were talking about Disney Plus. So they priced it $6.99 a month an undercut of Netflix by a buck or a couple bucks. Annual option of $70 a year. They also gave some guidance. They expect 60 to 90 million subscribers by the end of fiscal year 2024, with about 1/3 coming domestically, 2/3 coming internationally. They also gave some guidance with regards to ESPN Plus subscribers and Hulu subscribers, but the pricing and the subscriber guidance for Disney Plus, I think, are the highlights here. Again, $6.99 a month, and they expect 60 to 90 million subs in the next 5 years. My best guess this morning as to why it is up so much and was not up at 7:59 last night was that this is a retail-driven rally. This is maybe the most consumer-facing story we've had. Well, I guess Lyft is pretty consumer facing, but everyone knows about Disney. Like you said, everyone knew about this. This is not a surprise. They announced
this wasn't like surprise news. We're coming out with the service. We knew it.
We
knew they were coming out with it.
They announced it like a year ago, but
it's like this just got announced and it's all surprise, and the market had no idea this was coming.
No.
I'm absolute shock. It's up 8 points. It's got to be one of the biggest moves for Disney ever.
All right, well, let's see.
Disney was 8 points in a year. It's up 8 points right now. Okay. That is absolutely, I cannot believe how much is up. I have no position on it. I wish I would have been buying it. I've actually talked bullish on it the last few days, saying that I thought the multiple could expand. Well, they're coming in with a Netflix competing product. I didn't think it was going to expand overnight. That's an unbelievable move for Disney.
Did you get caught short on it at all?
No, I'm lucky actually from a day trading perspective that I didn't play this short off 120. Probably lucky that I slept in. I came in, it was 121, and I was like, whoa, big volume. It's going to blow through that seller at 120. I mean, it's traded 1.4 million shares. We're 817. It's going to trade 3-4 million shares. Buck's meaningless. It's going to chew through anything in the book. So if you're leaning on a level in the book, forget about it. It's too much volume. When you're leaning on levels in the book in the pre-market, volume is your enemy. There is huge volume in this. So it will chew through the 119, 120 seller, which is still there in the book. There's still 200,000 to sell 120. They're getting some price improvement this morning, it looks like, because this thing is now trading 124.30. I tell you, I am not chasing this Disney move. No.
The last time Disney had a move like this, February 4th, 2015. I have no idea what happened that day. That could have been the day they bought. Oh, no, it would have been the day they bought Star Wars. I don't know.
But this is incredible. Joel, what are your thoughts here? I mean, we look at Disney up 8 sticks. I did not see this coming. I mean, it wasn't like a random news event. We knew this was coming. I mean, yeah, they gave some details. Yeah, they undercut the price of Netflix. But, the other thing to consider is Netflix is only down $4 on this. So if you want to buy Disney up 8, now you're only going to sell Netflix down 1%. I mean, if you're really loving this trade and you think they're going to take Netflix's and eat Netflix's lunch, why is Netflix not down more?
I told you my theory. I think this is a retail-driven. I think regular, average Joe and Jane are coming in this morning and buying Disney because they have heard that they're launching a Netflix for Disney. That's just a theory, but it's my theory. I'm sticking with it.
Spinner's talking about the options. He's like, the 120 is going to be 10 times what they were worth. I mean, so you knew this event was coming. Even the option premium people did not see this coming. Nobody saw a move like this coming in Disney, not overnight. So we'll have to see. A lot of things can happen here. I mean, it's wild. Could it give some of it back? Yeah. I got to think 125 you're coming into, big psychological level, but who the hell knows? This thing's wide open now.
Yeah, and I think the big news that Disney hasn't even brought out yet is PreMarket Prep is going over to Disney. And,
are we going to be available on what's going to be called Disney Plus?
I'm waiting to hear from Bob Iger.
If he calls us and gives us a good offer, we'll have to talk.
I might have to hop off if he calls during the show. Okay. So, I don't know what to say. I mean, Robin came in with some calls here, and she's thrilled. Boy, Robin, you got into the calls. I'm going to let you get out of them. I don't know. I mean, I'd say I'd bring.
I like selling the stock against my calls. So if you bought the 120s, you could sell at 124.77 here in the pre-market. And you sell it short, and then you just lock in your profits, as opposed to just trying to sell, the calls outright. It's always better, more liquidity in the stock itself. I know people don't have margin to do that, and that's the biggest issue. Yep. Sometimes when you got a smaller account, you can't afford to short. If you have 10 calls, you can't afford to sell short 1,000 shares of Disney against it. I always like selling the stock and locking it in that way, as opposed to just getting 470. Because if you get a reversal, you participate in it. But this does not look like it has any hints of reversing here. It keeps going higher.
And
it's going to test 125. I'm not trying to call a top, and I've been burned so many times, so that's probably the wrong thing to do. But can this go through 125? Like, I mean, you went through the big psych 120. 125 has got to stall it out. No? No?
I mean, TNA is asking Disney, is it a gap and go or pop and drop? Keep an eye. I mean, the only thing I can really say for this is keep an eye on that pre-market high, wherever that is. Let's say it is 124.80, and you use that level and give yourself a little room. So if it goes 124.80 off the hop and it goes 125.10, 125.20 and takes off, man, you got the gap and go to the upside. Where the big whoosh could be is if you get a rally up another $1.25 or something like that, and then you come back down through the open. But I just got to believe there's some institutions that have just been sitting on this forever. Just, I mean, this is like a gift from heaven in Disney.
It's such an obvious trade. There was people, I mean, I'm kicking myself for it because I said it 2 days ago on the show. I was saying, I like Disney from here because we was trading with a P multiple of 15, and Netflix is sitting there with a multiple of like $1 billion or whatever it is, 90 or 100. So I'm like, I could see the Netflix multiple contract and the Disney multiple expand a bit. But I thought that would happen over time. I didn't think it was how it happened overnight. So definitely not a position for this. I have no position in Disney or Netflix. But okay, question: go to the Netflix chart, because if you're gonna rally Disney, the biggest, with all the theme parks and everything, 7% on this news. Why in the hell are you only hitting Netflix down 1%? Is Netflix not down enough? That's what I'm asking their chat. Are they not down enough for this? If you think Disney if this is the whole reason that Disney's coming for Netflix, why is Netflix not down more then?
I don't know.
So I'm saying one of these things is wrong. Either Disney should not be up as much as it is, or Netflix should be down a hell of a lot more. But I think one of these things is wrong.
I look at 360.
Efficient market hypothesis challenged officially here on pre-market prep, because this is not efficient.
360. You got a series of lows at 360 here. You have not hit that yet in the pre-market trading. I see a 59.93, 59 even. So those are the couple lows. I mean, there are other lows above 360, but I'd use that as my bogey. But, I just want to point out one other thing. Some people did see this coming, and it wasn't me or you or Spencer. It was Cowen and Company, who upgraded the stock on the 9th from market perform to outperform. And BMO's Capital, Daniel Solomon, upgraded the stock on the 10th from market perform to outperform, raised his price target from 114 to 140. Who raises their target in Disney, a stock that hasn't moved, $26 in 26 years, bumps the target? So there you go. If you're following analysts, I know we talk about a lot of fades on stuff. Whew. These guys, you know what this also reminds me of? You remember that Mickey D's run that we had? They got started by the analysts. That was a long time ago. I can't even remember. Maybe that was in 17. But in 2017, Mickey D's had
a huge run
2 down months. Yeah. He started with an upgrade. Now this is news aided. So they've took their time. Everyone forgets about the ESPN unit now. And, it changes, Dennis. You always talked about changes in media and how we're going to consume our content. And perhaps, this is the change that's been waiting for. Disney it's back at the 124 area. Dennis, you talked 124 or 125 as potential.
Yeah, it failed right there as it got up near the 125. So I keep an eye on that. I think it's overdone here short term. Long term, I still like Disney. Long term, I wish I owned it in my invest portfolio. I will be looking for pullbacks to get into Disney because I'm still a believer in the House of Mouse overall. I think there's value there of 15 or 16 times earnings, but I'm not chasing it up $8. Today, I believe is not the time to buy.
Can I ask a question then? How many people do you think are actually going to pay, not use, pay for this service? Because I've been on Netflix for 5 years. I have never in my life paid for Netflix. Right?
They're going to come knock on your door, Spencer. No, but we know everybody shares accounts on Netflix there too. I don't know if Disney's going to do it the same way. I mean, you can easily, Netflix could solve that problem tomorrow and just say not multiple users on the same account. But they like multiple users because the content's being viewed. So they've always said they don't mind multiple users on the accounts.
HBO said that too. HBO said that too.
Yeah. So is Disney going to go multiple users on the account? Or are they going to be very strict about it? I mean, you can write an algorithm in 2 minutes to stop that from happening. So it's a matter of whether they want to stop it or not, or they want their content viewed. I've always said I believe Disney has superior content. I think they have the best content out there. So if they're going to, be producing stuff, it's going to be good. So I'm a believer in the product. I just think I can't believe it went up this much on it. So I'm mad at myself because I was bullish the stock. So I'm just mad that I didn't position for this. So I'm going to be one of those mad days. I'm going to be I'm going to be mad all weekend. Angry.
Don't be mad all weekend.
All weekend.
I'm probably
angry.
Like the only person that for 1 or 2 months paid for 2 subscriptions to Netflix. One of my kids signed up and didn't tell me.
Joel's paying for 2 and only watching 1. He's the only person in the whole world. Why? Why do you have 2?
No. For 1 month this happened. This happened. I'm like, I look on my bill. I'm like, why? And it was like $7.99. I'm like, oh, I signed up for it at school. I'm like, what? So, anyways, we'll take a look. Disney. We mentioned that. Let's just keep an eye on 124.80 for now. 124.85. That's your pre-market high. Monster volume. So, Dennis, there's no exercise here in looking in the book, right?
No. When you see something trading 2 million shares by 8:27 in the morning, don't even worry about the book. Book meaningless because it will chew through all of that. And I mean, it got up to the 125. Then you think about, what's at 125, but I can't even see the book at 125 because New York doesn't even have that many levels open for it. So unless you've got a really special book there, maybe some high frequency traders have it there. My book doesn't even go to 125. So I would assume there's some size there, but the book doesn't even go that far because it's just too far out.
Okay.
And Stargazer with a good point that we also don't forget about Apple, whatever they call it, Apple TV Plus. I forget what it, but and also
they're all coming for Netflix.
Yes, and
look at the competition coming. The rating is on the wall here. Yet Netflix doesn't go down. So trades with a multiple. What's the P multiple on Netflix? Anybody got it? It's got to be 90.
We can look.
What is it?
Real quickly.
Not the multiple. Look at. I know they look at users, and we don't value on earnings.
It is 80,
and we don't care about PEs. But 137.
It is.
I have.
As you're trailing, forward is 88.
Yeah, trailing. What's the forward one?
88.
88. So 90 was a good guess. So you're gonna pay 90 times for Netflix when Apple's coming, when Disney's coming, and you're gonna pay up for Disney too, and you're gonna pay up for Apple too because Apple's been running ever since they announced their product as well. So, I mean, content. What about the content providers, the other ones? I mean, is Disney going to be exclusive, just producing their own content, or are they actually going to, be buying content from other people to put on there?
I think they have.
Did they say anything about that?
Well, they have so much IP. I think to start, they're going to go from their own
stuff. But you think about content is still king, and this is why I was always looking at an AMCX. And I was looking, at some of these smaller content producers. Obviously, Lionsgate has been a disaster for me, but it's been coming back lately. Discovery, some of the smaller content plays, Viacom is already, but there's a bazillion of these smaller content producers there. Some of these get gobbled up. Joel, thoughts?
I don't know. I tell you, it's I watch sports. I mean, I had sports and. I don't watch.
Me and you are sports lovers. I
don't
agree.
watch so
I
much
can
TV.
sit there and watch a ball game or a hockey game. But a lot of people don't watch sports. A lot of people watch other shows. And I watch The Walking Dead. I love AMCX for that. But, I don't know if they're just a one-trick pony. But they've come up with some other good shows there, too. But it's such a cheap This is why I've had AMCX in my portfolio for a long time. And I've sold it because it got too hot. I should probably rebuy it. I mean, maybe we got to buy some of these content producers. Because if it's all going to that, they're all going to need content from somewhere. And maybe it's going to be some of these smaller ones that, really. And Chad, help us out here. You got some other content producers there too that you like. Let us know. But, off the top of my head, I think of Lionsgate, LGF.A, which I own in my investment portfolio, and it's not been good. DISCA, Discovery, AMCX. Let's go to we could go to the trusty Benzinga page too and grab some other ones there too.
There aren't that many. I mean, CBS.
That's what I'm saying. Some of these could be in demand.
There aren't really that many of these.
What about Roku? How's this going to? Michael Pellini is asking. Thought how will this affect Roku?
Okay, so good question. There's a report from Bloomberg this morning that the Disney Plus is going to be available in Apple TV, which is like Roku. It's the same as Roku, but it's just Apple's version of it. And again, these are the pipes. I haven't seen anything with regards to whether or not Disney Plus will be available in Roku. I would hope, as both a Roku and Apple TV user, that they would be. I'd be really pissed off if it wasn't, and if it's not, then that'd be pretty bad for Roku. But I have not seen any confirmed reports that it will be available within Roku's platform.
Roku got a couple downgrades, traded up $1.15 on the news. Someone asked about this yesterday, and it got hit off the downgrades, but maybe it's running out of sellers here. On the big drop, it went from about 340, 6340, 6073, 24 million. And now it's just the volume has kind of dwindled off a little bit. No double bottom. 57.31 was your low yesterday. 58.07. You're trading green on the session. I like the double close area. 58.57, 58.65. We are trading above that, so some room to go on Roku. Dennis, in balances, what's there, a zillion to buy in Disney?
Let's go look. I would imagine so. Disney right now is 124,000 to buy. It's going to be over $1 million, because it's going to grow. Everybody that's selling it short is putting orders to buy it too, so that's going to grow. Your normal General Electric 300,000 share to sell. That's every single day. So the dog of all dogs is still trading down here, even when it's trading up to 3 cents. But even when the market and everything is trading higher, it wants to have a sell imbalance. We'll probably open red because that's what it does. And we haven't even got to the earnings plays here yet because we're half an hour into the show. We haven't talked JP Morgan or Wells Fargo earnings. That is absolutely incredible. JP Morgan is having a nice pop here. If I am thinking about the book, and JP Morgan, I think there's one you can think about there, I would think about 110. So let's go look here, and I just want to go look and see if there is anything in 110. Oh, it's just not showing to me. It's too low. Jimmy A, did you notice the 110 earlier? Was there anything there? JP Morgan, I know he looks at the book. It's not giving me enough levels now because it's filling up. But 110, I would think there's going to be some size up there, and we're trading 109.50. So kind of like the fade of JP Morgan. And you know what? On these earnings, let's go quickly. We got 2 minutes. Quickly, give us JP Morgan, Wells Fargo numbers, Spencer. We can try to break those down quickly before our guest.
JP Morgan Q1 EPS $2.65 versus a $2.35 estimate. Sales 29.1 versus 28.47 billion dollars. So beats for JP Morgan on both the EPS and sales in the Q1. Wells Fargo, this is out at 8 a.m. Q1 EPS $1.20 versus $1.11. Q1 sales 21.6 versus 20.99. So a beat on both the EPS and sales for Wells Fargo as well. Beats across the board this morning.
JV Spec saying there's 100,000 at 110 in the book. So I can't verify that information, but those guys are pretty good. So if they're saying it's there, it's probably thick up there too. And it's just psychological.
Yep.
So I would think that's going to be your first level of major resistance for JP Morgan. Can it take it out? Sure. It's already traded significant volume, 374,000 shares, but all that volume has been done below the 110 price. So 110 does matter here still. And that's the one thing to consider when I'm talking book. You want to see what's the volume traded above the price. So like if there was 107 or 108, it could chew through that. But nobody's been buying it up above 110, so that 100,000 is still in play.
I can just tell you that JP Morgan is wild, more than wild on earnings days. So
it is.
It's going to be.
They have a tendency to reverse though a lot of times, don't they?
I was going to say that. I was going to say it, but I didn't want to.
No, we're not saying it's going to do it this time, but you ought to always be, if you're chasing these things up, you got to be aware that these things sometimes do have some reversals. And Wells. Speaking of reversals, Wells was up a lot more. It's already come off.
Yep.
What was Wells? Give us a Wells chart.
The Wells got up to 49.29, and this has not been a healthy stock here.
Been the worst one.
Yeah. Look at 47.38, 47.40. That's a pair of lows in the last two sessions. You also have a low at 47.05. So, man, it's 60 cents away from here, but pop and drop, a big reversal on this one. I guess you got to give it to 47.06 because that was your Feb 8th low. But that's
130,000 shares up at 50 in Wells too, so that's significant. So if it does go and start to run up again, you got a major resistance point Wells up at 50.
Okay. All right, Spencer, what do we got on the docket next?
We're going to take a quick break and grab today's guest and talk about some IPOs with Kathy Donnelly. She's a proprietary trader and co-author of the Lifecycle Trade. Is going to break down Lyft and its comparisons to other recent IPOs. We'll be right back in a moment here with Kathy. All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, Dennis Dick. We are now joined by Kathy Donnelly, proprietary trader and the co-author of the Lifecycle Trade. Kathy, how's it going this morning?
It's going great. Thanks for having me on.
We're glad to have you on, and you got a tough performance to follow up here. We had Eric on the day of the Lyft IPO, and he was just throwing up big caution. He was just very, very skeptical about, the upside potential, the pricing, where it was going to go. I mean, he didn't, of course, you can't short on the first day, but he was spot on. And shout out to Eric and also to you and also to Eve. You guys are just tremendous with your communication and your prep work. We just really appreciate it. But when you look at IPOs and the price action before and after, you like to do comparisons, right? And we all remember the Facebook IPO, pump and dump Facebook IPO. Spencer is going to throw the chart up there and you're going to walk us through it.
Yes, absolutely. Yeah, as you know, my trading style, I'm always looking for a precedent of some sort for whatever it's going to be the next big leader or maybe a loser. I don't know. But yeah, let's look at the chart and see.
Oh, it's up right now, so tell us what we're looking at here. We have our list.
Oh, I'm sorry.
No,
I
it's
don't
okay.
see it.
It's
okay, so I'll talk about
7
it.
second delay.
Yeah, there's a bit of a delay.
Yeah, we're getting Disney to fix that.
So 2 weeks ago when Eric was here, he mentioned that he thought Lyft could turn into a pump and dump like Facebook. So here you see side by side the first few days of Facebook and the first few days, well, almost a week, 2 weeks now of Lyft, and they look almost identical. So it's definitely following that pump and dump pattern where the stock immediately starts to go down up to much fanfare, which we know there was a lot of fanfare with Facebook. There was a lot of fanfare with Lyft. And it was already down again, new lows this week, 18%. So far, it is definitely following the model. And, I had someone ask me, oh, well, if you still had Facebook in the longer haul, you'd be up. But, 54 months, I think it was for Facebook, that it was down, consolidating, creating that institutional due diligence phase that we talked about. And, that's dead money. You're down and you don't know if it's coming back. I don't know if I can sleep very well in that situation. So I think it's always good to wait, as we wrote about in our book, The Lifecycle Trade, give the stock a chance to see what kind of pattern it's forming, and then be prepared to buy it once it comes out of that institutional due diligence phase, which Lyft might do in the future, just like Facebook did. But there'll be the opportunity when it's there.
Dennis Dick here. Those two charts are absolutely incredible when I look at the comparison between Facebook and Lyft in the first 10 days of trading. Great job on these charts. This is crazy. And great job, obviously, by Eric when he was on to actually call this ahead of time.
Yes, exactly.
These two charts look identical. I mean, there was the big down and then 2 down days, and then a couple of days where, there is a little bit of life, and then the continuing of the down day. What happened? Can we look up further ahead at the Facebook chart here now to tell us where Lyft is going?
Yeah, so are you looking at the line chart that we sent?
Yeah, that's what we're looking at. So it's just on
PreMarket Prep. Great. Well,
PreMarket.Benzinga.com.
And I apologize. I don't know why I can't see it. But nonetheless, yeah, at some point, hopefully Lyft starts to bottom, kind of like Facebook did. And then you'll see that long consolidation, which I believe we noted on there about, a little over a year long. And, for Facebook, it was all about, we finally figured out how we're going to make money. We're going to show some earnings. And it had that huge gap up on earnings. And that was the start of it. So that's really what we need to look for. At some point, we need to look for Lyft to bottom, create a consolidation. And, it could be, who knows how deep it could be. But at some point, it'll start to come back up. You'll have an initial run up and then a base will form. And hopefully it's tight. And then that's where we need to be. Okay, the earnings seem to be coming in, sales seem to be coming in, and now look, it's going up, it's creating a base, and then that's when we want to be ready to buy it. At some point, there's going to hit some turbulence zone, as you see on that Facebook chart, which will be its prior high, and in this case, it will be the high of the first day that it traded. So it might be a little rough there, but then once it gets through that, you'll have that institutional advance phase, and then that will really be, hopefully, some smooth sailing. It'll be the easiest time to hold. We can't guarantee, 50%, 100% gains, but, hopefully there'll be definitely some gains at some point once that happens.
Kathy, the biggest difference here, though, is that Facebook has always had a relatively simplistic business model. They make money off of ads. Lyft has not even figured out how to make money yet. It's an entirely new business. So how can we compare these two?
Yeah, well, from that standpoint, yeah, they're two different industries. And I don't know if we can really compare it from that standpoint, but we can compare it in that, well, Facebook didn't know the institutional investors weren't sure how it was going to make money. And Lyft, I think it's the same question. And what's even worse for Lyft is that it's got competition with Uber. And so far, Uber is kind of ahead in that game, even though they're showing losses as well. So yeah, it's going to be a good question. Transportation as a service, I'm not a millennial. I like to drive my car. I don't like to Uber or ride share. So I don't know. It's going to be interesting to see how that market ends up turning out.
Yeah. We're getting some comments in the chat here regarding it's hard to compare Lyft to Facebook when you have Uber coming down the pipeline. For Uber now, I mean, let's just talk about that. Does this give them a little hesitancy in what they're doing, or you think they're still going to proceed full speed ahead?
Oh, I think they'll still proceed full speed ahead. I mean, of course, this is my opinion.
Okay.
Why not? They're going to think that they're going to do better than Lyft, I would think, because that's how most, I think, companies are. Oh, well, we're better than Lyft, and for all those reasons. But, there's a lot of IPOs coming out this year, and I think people are excited. I don't necessarily know why, but, we've got a good market so far. The NASDAQ is going up so far this year. We've had a great start to the year. We have a great start to the S&P. I saw a tweet the other day that someone's comparing to 1998. So we could be up, 20% or more for this year, or even more. And so that's the kind of market you want for new companies, new IPOs. So they want to come out in these kinds of markets. So whether they flop or go up or whatever, they want a strong market to come out in.
Let's just go into detail a little bit on the Uber IPO, because do you see this having something similar where you're going to have a big, everybody excited getting in there and then falling off like Lyft, or is everybody going to be more cautious this time around because of what happened with Lyft?
I would hope people would be more cautious. I've seen a lot of news out there where, people are saying what we're saying, that you should wait and not buy on the first day, but I've also seen the other news where, no, you need to pounce on it on the first day. So I don't know, maybe it's still 50-50. It's hard to say. Until someone actually does it and feels the pain, they may not get it and still want to do it. It just depends on what their track record has been, right? I mean, if you first started investing in the market and you did well, you think you're always going to do well. And then you get hit a bad market and all of a sudden you're losing, then you're going to be more cautious. So I really just think it's going to depend on the person's experience and hopefully the news that they're looking at, and the good news, not the fake news. That says you might want to wait a little while before you jump in on the first day.
I mean, in some cases, though, jumping in on the first day works, and that's with TradeWeb, TW. That opened after, obviously, having I think it was 28th underwritten price, and then 34.26 it opened after trading, and it's been straight up ever since. We're now trading at 42.75 here in the pre-market. So in some cases, it does work to jump in on the first day. How can you identify which ones, are going to be, the good ones, and which ones are going to be the not so good ones? Is there any techniques?
Well, with TradeWeb, and I'm pulling it up right now too, so I can see it as well with you. I mean, one of the differences I think on this one is that, well, it's got earnings. The last quarter earnings was 21%, and the sales last quarter was 56%, and accelerating sales at that over 175 million, it looks like. So just from that standpoint, you've got something in your favor that says, well, maybe this one's going to be different, unlike Lyft, which didn't have any earnings, or Facebook. This one took off immediately and it didn't even create a base yet. We didn't put this in our book, but we played around with an aggressive buy point, something that if you really believed in it or it had earnings right away and you wanted to purchase it, taking a chance on that, buying on a new high of that first day. But as you see, it was still volatile that second day before it made that new high. And I don't have an intraday chart to pull up here quickly to say, what it actually did. But, you'd have to have a tight stop on that. I mean, that would be really aggressive. And you'd also have an aggressive, okay, it's not working, I'm out. This one could end up being, a rocket ship. I don't know. I don't know much about the specific company, but yeah, it's doing great so far. And I'm wishing I had bought it. But at this point, I'm waiting for a consolidation of some sort. And if it creates a good one or a flag, then yeah, I would be on this one. I like its quarterly and sales so far as compared to some of the IPOs we've already seen this year.
Well, that's great. Wow, great segue into my question, which is other IPOs we've already seen this year. We've had Levi. We're gonna get Pinterest here. Do you have any insight into? Well, I guess we'll start with Pinterest because that's the one we haven't seen yet. Same story, similar to Lyft, a very consumer front-facing company, popular among millennials. Do you have any insights into the Pinterest IPO that we're gonna get here in, I guess, a couple weeks?
Yeah, I actually have not looked at their numbers, so I can't tell you if they're have great sales or earnings already. I haven't done that research yet, but I can tell you on our IPO team, there's the four of us, and the fourth guy, Kurt Dale, his wife loves Pinterest, and hopefully he's not going to mind me bringing this up, but she has seemed to be a good picker of stocks in the past just based on her use of the product, so I know she's big on it. And so that gets me excited about it. So it'll definitely be one I'll be watching closely.
And have you looked at the chart of Levi Strauss?
I have looked at Levi's, and I'm actually tempted to buy some of their jeans because I read that they're trying to come up with an alternative to get people back to the non-stretch jeans or something like that. But yeah, Levi's been all over the place. But when I look at it on a weekly chart, it looks like it's consolidating. However, it does seem to be an expanding consolidation. It seems to be getting a little bit volatile as it's kind of growing out to the side. I definitely have my eye on this one. It does have good quarterly earnings. It just reported 86%. Let's see. So, it was negative the previous quarter, but we have like two accelerating quarters. And the sales, they're only 7% the last quarter. It's been a company that's been around, so that doesn't necessarily surprise me. But yeah, I might play with this one if it, it's got a consolidation. I've been watching it as it kind of breaks into new highs, immediately comes back. I want to see some tighter action. But I'm really curious about what's going to happen with this one. And I think what will help is if I do some market research and buy a new pair of jeans.
All right. And then one more, this is from our chat, Eventbrite, an IPO from, I guess, September, around that time. Benzinga is an Eventbrite user or customer. Have you looked at EB at all?
I haven't looked at EB in a long time. It was very thin. Let me see. One of the things we wrote about in our book is we like to have liquidity of $20 million a day or more. We've seen in the research and the data that Eric and all of us put together is that really kind of is the marker for what could be a potential super growth stock. This one currently doesn't meet that according to my numbers, trading at $20 and 50-day average volume of 759,000 shares. So it's not one that's been on my radar. I did watch it when it first came out. Eventbrite, I don't know if you've used it, but I'm very active in the fitness world and my community, and a lot of events are posted, and the tickets and all the marketing goes through Eventbrite. So as a product, it seems like a really great product, and it's easy to use. And it's actually interesting because I thought, well, why don't they just put it all on Facebook? But they're actually using Eventbrite instead. So it is a preferred platform, I believe, from what I've seen. But as you can see from the chart, you had 2 weeks, didn't really do much, and then it went down. And then maybe it looked like it was creating a institutional due diligence phase there after the third week till about, March of this year. But then now it's gone even lower. So it's still trying to find a bottom, and it looks to me like it's still trying to build, a solid institutional due diligence phase. It does have sales, but still no earnings. So we'll just have to wait and see on that one.
So until then, you wouldn't touch it. You really wouldn't touch it at all.
Absolutely. I mean, I would be watching it if it was liquid and it hadn't dropped on earnings on March 8th, the week of March 8th. I would have been maybe watching it if it was liquid enough. It seemed to have tightened up, but then now that it's broken that trend and it's going down and it really hasn't, to me, it looks like it might still go down. So now it's off my radar. Exactly.
All right. A big thank you to Kathy Donnelly. She's a proprietary trader and the co-author of the Lifecycle Trade, specializing in IPOs. Kathy, thank you so much for the time this morning. Have a great weekend.
Thank you so much. I had a great time. Really appreciate it. And just a quick note that, I'm not giving any buy, sell, or hold recommendations.
Yes. Hey,
thank you.
Great. Yep. Great point. All right. Thanks a lot, Kathy. 8:52 here in the markets, guys. Anything new happening?
Wells Fargo is red. So it's given it all back, and actually just ticked back, and it's going to make me, well, no, it's down 3 cents. So it's basically flat. So, but giving it all back. So we're up in the upper 49s, giving it all back. JP Morgan slowly leaking a little bit. We're up at 109.50 when we were starting to say there was resistance of 110. It's 109, so it's kind of leaking there a little bit there too. But just be careful in the financials, because these are notorious, like me and Joe were just saying 20 minutes ago, for popping and then dropping. So I don't know. You go to Bank America there, whole kinds of resistance up at 30. There's over 1 million shares in the book up at 30. So you think 29.56, it's getting a nice 50, 60 cent pop here. Gets 70s, 80s. I think it's going to struggle. So if you're buying up here, I don't really see a huge amount of upside unless we just really start to take off. They start buying the banks hand over fist here today. I think a lot of the gains are already in these things this morning. Goldman, nice pop here this morning, but I'm more prone to fade that pop there too. So I don't know. It's paid to be fading bank earnings for the last few quarters here. They've had a decent run up already here too. I tend to lean that way again. Joel, mute.
No, Joel is having some microphone gremlins today. I think we got a loose cord somewhere, but he's trying to talk about about fading Disney. Hold on 1 second.
Disney is leaking here too. So we got Disney. It was 120. I know we can't hear Joel, so I can just kind of, look here and say, it did get up near 125. It's pulled off that a little bit. There's still 279,000 shares to buy in the book. It's going to chew through most of that size. I think I just can't see paying up $7 for Disney on this. Yeah. So I know there's a lot of people doing it here this morning, but it's just such a big stock with a huge market cap. Yes, it's good. Yes, I'm a believer in Disney long term. I think you get it cheaper, though. I think you get another shot.
And boy, oh boy, I don't know who's out there, but Netflix is now down 7.60, 7.17.
That was the trade.
Yeah, that was
It was 364 when we were starting to say, is Netflix a short here? And it's down $4 from where we were just talking about it 20 minutes ago. I mean, if you're going to buy Disney up 7 points, it's absolutely crazy. Netflix will only be down 1%. Now it's down 2%. You're going to challenge major support here on Netflix today. If Disney's, you're going to see an inverted trade here to a certain extent. Disney starts to give it back, it's probably going to be good for Netflix. So just for today, you're going to see, I think, those two stocks go completely opposite directions here. So if Disney starts to crater, Netflix might start to catch a bid. If Disney holds on and continues to go higher, I think it's bad news for Netflix. So let's see what it does at this 360, but P multiple 89 on forward earnings, lots of competition coming for them. Market is spooked here, at least this morning. So I don't like Netflix. Not right now.
I just want to cover real quick. It's funny, we get this far and we don't talk about Boeing. In the news almost every day. You got back in, like we said in this area, if you could just close your eyes and forget about all the Michigas and just buy the stock based on the charts here, you got the 362.92. Now you're up at 370. Well, you closed yesterday at 370.16, up another $5.50. I have to imagine that there's just more good news coming out. They tested 96 test flights or whatever. So man, oh man, what a just incredible support level here. Who knows? Maybe heading back up to that $400 area. Pre-market high stands at 375 and change. 375.71 is your pre-market high. You just take 72. And on the dailies, I'm looking, what do? You got a gap to fill between big old gap, 379.80 to 390.95. So if you're looking for another target on the upside, I'd go with 379.80.
But what if we take out 360?
I mean, it doesn't. If you do, you do. I mean, it's just been.
Where are we heading if we lose 360, which we've lost here in the pre-market? We don't know if we're going to lose in the regular session. 349 possibility.
Dennis,
that was the low back.
I was just talking Boeing.
I don't know how we went to Boeing, so I missed that. So, okay. But you got Netflix, we were talking, we're $370 stocks. So it's a funny coincidence that you got two stocks trading the exact same price. So you had me confused here too. So, yeah,
no,
Boeing.
I think you were the only one confused on that, Dennis.
I was confused on. I don't know. Netflix, because we were talking Netflix. I don't know how we went to Boeing. So, anyways, Netflix 360. Let's go back to Netflix.
Okay, let's go back to Netflix.
Yet. Go back to Netflix. Netflix is below 360 right now here in the pre-market. Thoughts? Where is this going to hold? Is it going to get back up over and regain it? Just give us some technical levels just in case Netflix decides to continue to break down.
Okay. It is trading at the lows of the pre-market session, 358.99, right on the lows. I'll just go to the dailies, and I'm not going to lean on just one low because you have one low at 358.51. That's only one low only. After that, you got a $5 drop to 350.371, and then the whole 350 area comes into play. But you got to realize you got to hit, you got to catch it when it's going down, to cover the short, because when and if it turns, it will turn hard. But right now, 358.51, 353.71, and I would not be surprised if we saw 350 today.
There's a lot of ratings. We didn't touch on any of them, Spencer. Quick rundown here, ratings, highlights, just because we only got 2 minutes left.
Here we've got.
Oh, you got to hand the mic back. So I throw you under the bus here.
No, it's okay. We got a buggy mic here this morning. I'm seeing Goldman Sachs a few upgrades, upgrading Delphi Technologies to buy, Martin Marietta to buy, and reinstating Murphy Oil. I'm sorry, upgrade Murphy Oil at buy, reinstating Exact Sciences at buy. That was all from Goldman Sachs this morning. What else did I see? A few downgrades. This morning, I'm seeing Logme in downgrade at Barclays to underweight, Chesapeake downgrade at Goldman Sachs to sell. I don't know. It's kind of, what do you see?
Chesapeake's trading up because of the deal. So if you're looking at why is Chesapeake not down on a downgrade, the deal trumps the downgrade. So that's why CHK is still trading in the green. What about log me in, Joel, and throwing it back, or do you have a working mic? LOGM, we're down 3 points here in the pre-market. It's a serious downgrade to underweight, which is the equivalent of sell, but it's bringing us into all this support. What do you think of LOGM?
I was just thinking about all my logins and everything. Maybe I should take a look at this. Where are we traded? LOGM, correctly?
Yeah, down 344. That seems a little overdone to me, but I mean, it is a downgrade to equivalent of sell at Barclays. So, but I just look, there's lots of lows there, just under $80. I don't know. Thoughts?
Let me take a look at the day. Oh yeah, I see a bunch of lows. Or let's just look at the recent low of the move. That came in at 77.95, and that matched a prior low at that was 78.35. So I'll split those two lows and call 77.35. 77.80 as a potential support.
Benner making a great point that Netflix does report next week, and sometimes you get those earnings run-ups here, but it's all going to be about, the Disney news there today and how that affects Netflix going forward. You're going to have money managers making their bets, and do they come in here and buy the dip in Netflix, or do they continue to sell it? I'm more, I think, inclined to sell the rallies here in Netflix now, as I think it's going to start to roll over, but you do have that wild card of the earnings coming, and sometimes that puts upward pressure on it. I have no trade on it right now. Not sure if I'm going to trade it or not, but as just talking on the show, I think I like it as a short more than a long. At least, at least when we were talking 364, now it's 360, so it's continuing to leak a bit.
All right, and on that note, that I guess is going to do it for our show today. Busy show, like I said at the top, a lot of news. I'm sorry we didn't have time to get too many of your tickers in either of our chats, but we do appreciate you listening. As always, if you missed any part of our show, catch our podcast. It's on iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts, or just rewatch the show on youtube.com/Benzinga TV. Thank you to our guest today, Kathy Donnelly. Once again, thanks to everyone who joined us, either just listening or in our chats. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. Hope you all have a good rest of your day. Have a good weekend, and we will see you again on Monday.